Over the past couple of months, uranium has been doing a whole lot of nothing. In today's episode, though, we are going to look at the possibility of either a melt up or a meltdown in the uranium price and the market as a whole. Before we get started, though, nothing in this video is financial advice. I am not a financial advisor. Do your own due diligence. It's your money, your responsibility. With that said, let's go ahead and dive in to our first chart here. This is the uranium spot price on the dailies, and let's go ahead and draw some trend lines. All right, so let's go ahead and get these trend lines set up. So what do we see here, you guys? All right, so first I can clearly see a support line building all throughout here. We've hit it multiple times. You can make the case that this might be a little bit more apropos. But nonetheless, we've had this long elongated trend line, and we've seen this pattern before. We've seen it all the way back here as of last year. We had this triangular pattern. We broke out of it. This was back in February of 2022. And we see a similar, more elongated version of this accumulating triangular pattern. And we have recently broken out of that. Now you can say, oh, all right, well, that's a huge leap to go from this peak all the way down to these peaks. Well, let's push back our resistance line a little bit further back. And nonetheless, we hit our heads on this version of the resistance line here, 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 and here, as well as here. And we finally broke out of it. And this was on April 19th. So strength of resistance line is dependent upon the duration of that resistance line, as well as the number of points that we hit it. Same thing goes with a support line. Now, we broke out of it. And one thing that I always like to do, and I always kind of, like to espouse, is whenever we see a signal on the dailies, it's best to zoom out and see if we can confirm that signal on a longer time interval. So let's zoom out on the weeklies. And let's look at the candlesticks here. And boom, we see similar confirmation on the weeklies. So this is increasing our confidence of a breakout. Now, if we zoom out on the monthlies, boom, a clear-cut breakout. And one thing to note here, guys, on the monthly, we see this hammer candlestick. This means that on the month of March, we went all the way down here, and then buyers ate it up. The sellers could not withstand the buyers. This is a reversal signal on the monthlies. Doesn't get much stronger than that. A clear breakout in the uranium price on the monthlies. Looking good so far. Let's go ahead and keep that thought in mind and move over to, well, you know what? Let me refresh this. Might do some funky stuff if I don't. So let's go ahead and look at URNM. And this is going to be on the dailies. So on the URNM front, all right, I'll let you guys take a look at this for a second. And boom, here are the lines. So we've already got the lines drawn out here. And we can clearly see a resistance line being built up over the last couple of years. Peaking in November of 2021. Hit our heads on it again on April 2022. Just missed it on September 2022, and we hit our heads on it again on February 2023. So we've touched it multiple times. It's been ongoing for a couple years now, and this is where we're at now. We've kind of been chopping sideways when it comes to URNM, the uranium miners, and we've got this elongated support line that we've been building up since August of 2021. You could make the case you can build it up even longer if you stretch it all the way out to here, but nonetheless, it's still the same support line. And this is where we're at now. So let's take a look at the dailies. Two big candlesticks. This a reverse hammer pattern just kind of gets me worried here with this red candlestick. We essentially made our way up, but then got rejected on the way up. Usually this is a reversal signal to the way down, but we finished it up with two subsequent strong candlesticks on the upside. And when the most recent candlestick as of Friday, This was the 28th. We had a pretty strong whisker down. The buyers ate that up and shot the price all the way up. What was it, 3%, I believe, on the day. So some pretty good signals of reversal in the uranium price so far. Let's zoom out and look at things on the weekly. So this is how things look on the weekly. Let's zoom in a little bit. And what do we see? We see a bullish engulfing on the weekly for the most recently completed week. And so what does a bullish engulfing mean? A bullish engulfing is another reversal pattern. It means that the probability of moving higher is even higher than it was before. We do have a bearish engulfing from the week prior, but the fact that we had a bullish engulfing this week cancels out the prior week's bearish engulfing. So the chances are that we move higher this week because of this bullish engulfing. Nothing is 100% certain though, guys. You know, we're just dealing with likelihood and probability when it comes to this stuff. But things are looking good on the uranium price when it comes to the weeklies. And finally, let's zoom out. Sorry, not the uranium price, but the uranium miners in this case. Let's zoom out. Let's look at things on the monthly and see if we have any confirmation there. So monthlies, we're still... So we have a red candlestick on the monthlies, but all hope is not lost here because for 2 consecutive months now, we had two consecutive hammer patterns. Essentially, the price made its way all the way down here and was rejected by the buyers. The buyers overpowered the sellers, and that's all the market is, guys. It's just a fight between buyers and sellers. And for 2 subsequent months now, the buyers have been overtaking the sellers. So good news on the miners. And if the miners are going up, then most likely money's flowing into the mining space to get that extra oomph, to get that extra leverage that you would get from an increased uranium price. You'd get more of that increase with the miners. So the uranium price doubles, you can expect the uranium miners to do even more than that. So let's go ahead and look at just that case. So this is the uranium miners ETF, URRA, divided by the uranium spot price. And this is where we are. So this is the weekly. Let's actually bring this back down to the daily and see where that takes us. You know, this thing might be a little frozen. Let's rerun it. Yeah, I want to reload. And let's see how this thing looks on the daily. All right. So on the daily level, we've got URA relative to the uranium price. And the miners have actually been underperforming the uranium price, the uranium spot price. But nonetheless, the last 2 consecutive days, we've had a number of these long hammer candlestick guys. Like we've had one here, we had one here, we had one here. The buyers are eating up all of these deals. So this is a sign of strength. Doesn't mean it has to happen right off the bat as soon as the hammer candlestick hits it. But it's telling us that there's something brewing beneath the surface. And nonetheless, I mean, we broke out of this resistance line back in... Sorry guys, this is the monthly. So, all right, so let's take a look at this. On the monthly, we broke out of this resistance line. We've been retesting it for a couple months now, few months, stretching all the way back to January of 2023. And we retested it and we failed the retest, which is a good sign. Further indication that we're moving, seeing a trend reversal up. On the dailies, however, we see this same pattern brewing. So if we zoom out, clearly see we've been retesting this resistance line for a while now. And for the week, of the most recently completed week, we've had 5 consecutive green candlesticks, which is really, really strong. Now you can say, oh, well, we had 5 consecutive candlesticks here, green candlesticks here, and look what happened. We went all the way back down. And then we had some here, and we went all the way back down. So this is a battle between the buyers and the sellers, but the key, most important aspect of this is that we've been retesting this resistance line. The buyers have stopped the sellers from bringing it all the way down below this resistance line. And now finally, let's take a look at URNJ. We don't have that much data when it comes to URNJ, primarily because this is a new ETF. It goes all the way back to February of 2023, but nonetheless, we've been seeing some movement upward in URNJ. URNJ is the Junior Miners Index for ETF, courtesy of Sprott. And, we basically see, the same story being built out here. Green candlesticks, red candlesticks. So we've been kind of settling down in this area here, haven't really been moving much, but we did break out of this declining resistance line, which is good news. So what is the catalyst to all of this? Well, as of Friday, Cameco came out with their earnings report, and let's read the headline here. So Cameco reports first quarter results. Solid quarter demonstrating the strength and purpose of our strategy, long-term contracting success in new market. Still early days of a market transition. Let's go through this. So our results demonstrate that the strength and purpose of the strategic decisions we've made over the last several years and the continued support we see developing for nuclear power around the world. In fact, I am not sure there's ever been a better time to be a pure play investment in the growing demand of nuclear energy. We remain in an enviable position. What we believe are the world's premier tier 1 assets operating in a stable geopolitical region. And as MacArthur River and Key Lake, blah, 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 we are returning to a tier 1 structure. So essentially we're still early on in the contracting process, guys. And the fact that Cameco is starting to see some percolation in their stock. Actually, let's pull up Cameco now that you mention it. So let's look up CCJ. Let's pull that up. See how it's things are looking there. TradingViewX kind of weird sometimes. Let's rerun this browser. All right, so let's go back to the daily. And boom, look at that green candlestick for Cameco. That is a sign of strength right there. Strong reversal pattern. And Cameco's actually been holding up fairly well compared to the rest of the uranium mining space. And why is that? A good deal behind that is a lot of these uranium mining companies are speculations at best. You're looking to roll the dice, hit it, and get a lottery ticket. But when it comes to Cameco, they know what they got. Cameco is an investment play when it comes to the uranium market. There's a difference between an investment and a speculation. With a speculation, you're basically hoping to get a lottery ticket, as some people put it. So with Cameco, it's more of a surefire bet on the uranium market, and we're starting to see that increase in the Cameco price. So let's go ahead and read through more of this report here. So the world is recognizing the benefits of cleaner nuclear energy and the critical tool it can be against the fight against climate change, providing energy security. So uranium nuclear power holds a best of both worlds type of scenario when it comes to providing a dense source of energy, as well as a non-carbon emitting source as well. So it kind of checks off all the boxes here. Notwithstanding, the likes of Germany and whatnot, different story for a different day. But so address the need to work together globally as the world grapples with providing safe, clean, reliable, affordable, and clean energy. 5 of the G7 nations, including Canada, US, UK, Japan, and France, have created an alliance to leverage their respective civil nuclear sectors. So we've got a transitioning to tier 1 cost structure, with net earnings of $119 million for Cameco, adjusted to net earnings of $115 million for the first quarter. Strong production performance. So their uranium segments produced 4.5 million pounds of uranium during that quarter. They continue to expect 20.3 million pounds of production in 2023. Long-term contracting, that is just now beginning. In some cases, may not even be getting started yet for a lot of utilities. We'll get into that in just a second. We now have total volumes on under long-term contracts of approximately 215 million pounds of uranium and more than 17 million kilograms of UF6 conversion services, with deliveries spanning more than a decade. So the likes of Cameco are securing their contracts, many of which have market-related pricing mechanisms. We can continue to have a large and growing pipeline of contract discussions underway. The recently announced UF6 supply arrangement will see us supply new markets into the next decade. And yeah, we've got 2023 guidance being updated. Their outlook for consolidated revenue on their uranium revenue. That's been increasing as well. Average realized price and average unit of cost of sales. We don't have to get into that exactly, into the nitty gritties. Their balance sheet is still strong. Again, Cameco is one of those reliable stocks that you can look at as an investment in this uranium sector. They've got $2.5 million in cash and cash equivalents and short-term investments, as well as $1 billion in long-term debt. And there's a bunch of different cases, for the reason we strong earnings. We won't get into the dirty details behind it. But what I will say, I want to point this to your attention before we end this video. This is a tweet from Casper J. Nuclear Advocate. He says, so we now heard Sky Harbor Resources CEO Jordan Trimble and Dustin Garrow say the same thing. Utilities have been actively buying in the uranium spot market recently. Why have utilities been buying spot? Because their term requests for proposals are not being answered. So these utilities are hoping to get the same deals that they expect to have gotten over the last 15 years or so, when uranium price has been depressed in the 30s, 40s, whatever. So you're sitting at $52 right now. So this tweet is basically saying that contracting has to hit $75 to make it worthwhile for these uranium companies, these uranium mining companies, to justify production of uranium, to justify drilling and mining of this stuff. This is the tweet that it references. So we've been hearing that it's U.S. utilities that have RFPs, been in the market for a while, not to get into any details on that. So they are stepping into the spot market now. And again, this is from Jordan Trimble, CEO of Sky Harbor Resources. So the utilities are being forced to buy into the spot market. And one thing that's really interesting with the spot market right now, this breakout occurred without the financialization of SPUT. That's right, SPUT hasn't bought a single drop of uranium in over a month now, and yet we saw a breakout. Signs are there, guys. And one more thing before we sign off. This is the fear and greed index that I kind of built out for specifically the URNM price. So a lot of you may recognize that we have a fear and greed index when it comes to the overall market, whether it be S&P, Dow, etc. This is something that I've created myself on a Python script. And this is basically, you've got your URNM price here in blue, denoted by your values here on the left axis, and you've got your fear and greed index here on the right-hand side, denoted by your red line here. And we're currently sitting at somewhere in the middle when it comes to this fear and greed index. You'll notice that anytime we hit, anywhere high around this level, the uranium price here in blue, falls off a cliff. We hit it right here, just before the peak in, September of 2021, and then we saw a subsequent drawdown in the uranium price. This fear and greed index is a forward-looking mechanism when it comes to the uranium price, in this case URNM. I use different ways to kind of capture that, including Bollinger Bands and so forth, but we're sitting somewhere in the middle. We've had a decent kind of outlook in uranium, but greed hasn't fully settled in. Remember, buy when others are fearful, sell when others are greedy. In terms of fear and greed, we're somewhere in the middle right now, so keep that in mind. Doesn't mean that we're due for a sell-off anytime soon, but it's always good to kind of get the sentiment in the room. With that said, guys, thank you for watching. Please hit the subscribe button if you haven't done so already. Hit the like button. Really helps me out. I would really appreciate it if you do so. And with that said, I will see you in the next video.